Good morning, everybody, and welcome to Money in the Law on My FM 101.3 and the Holliston Cable Access TV. My name is John Drohan. I'm one of your hosts, along with the other renowned host, Jay Marsden from the Marsden Law Group.
Not world renowned, Metro West renowned.
No,
We're gonna keep it tight. We're gonna keep it tight. Keep it local.
So. I bet you. Well, I bet you that if I went down to Key West, I'd bump into somebody that knew you. So that's not Metro.
I was
that's
just. That's actually. That's not. That's right. That's not Metro West.
And it's not West.
It's Key West. That's good.
That's right.
That's right. That's right. That's right. Key
West.
West renowned. Key West renowned. That's right. Good stuff. Good stuff. As you were getting ready to talk, I was thinking about the old days. We used to have the headphones on and Ray would fire up the
music,
the intro music, and we were bouncing around like it was game time. You know, like we were getting ready to run out on the field.
Well, you still kind of do that some at times. You do that, but I do miss the and you know, for those of you listening, especially those of you listening live, you get that. You get the the Warren Zevon
you can
intro.
And it's funny when you're driving around, all of a sudden at 9 o'clock, it's kind of crazy. You're at a light. And then all of a sudden, the cars around you, you start hearing that it's kind of thumping from those cars because you know it's 9 o'clock and it's Money in the Law time, and everyone's turning it up.
It's like Warren Zevon.
Yeah, it's like 1 o'clock on a Sunday when everyone's going to the put on the Pats game. It's kind of the same thing.
It's not unlike that, right? That Monday Night Football music.
That's exactly right. I mean, it's all those channels click at the same time, and there might even be some tailgating going on. So if you're tailgating the radio show, by the way, let us know. We're happy to come by. We will do an in-person
We will do the show from your tailgate.
We'll do an appearance. Absolutely.
It's so easy.
Absolutely.
Or actually even better, if we tape the show, right, then we can actually go to the tailgate and listen to ourselves talk.
Oh, even better.
And answer any. That's much better.
Oh, even better.
Right.
Talk about our favorite subjects.
And
ourselves.
We could video that. We could video that, and then
Christian could bring the camera. He could kind of do an action photo shoot.
It never ends.
Oh, where does it stop?
It never ends.
Media, love it. Love it.
We were just talking before we got started. Of course, we always talk about the really interesting things, like right before, and we were talking about if you were a famous person, right? If you were a famous person, whether it be a famous musician, famous movie star, famous athlete, and how when if you just happen to if you make the decision, or you just like a chance contact where you bump into somebody and you meet somebody like just the ordinary Joe, how that can change the life of people forever, right? And many of them do. Many of them.
We joke. We call it the brush with greatness, right?
Yeah.
The brush with greatness.
But many of them make a point, particularly you hear about a lot of athletes I kind of say athletes in particular who will go and visit kids who are sick, who will go and visit people that they know are fans. But you had mentioned Springsteen earlier about how Springsteen happened to be walking by walking by just a musician on the street who just so happened to be playing a Bruce Springsteen song, and then he was like, you know what? Why not?
Why not? Absolutely.
Why not? And that's probably that's taken it to a little bit extra level, right? So where you get to actually play. If you're a musician and you get to actually play with Bruce Springsteen, it would be the equivalent of you if the late Warren Zevon came back to life came and while you were kind of playing your guitar, it's like, oh no, let me show you how to do this.
Let me give you a couple of tips.
And let us write into Money in the Law.
That's right. That's right. Yeah, that's right. But those brushes with greatness, you want to send those into the website? Send those into the website. We'll read them. We'll talk about them. They're exciting.
If they're videos, we'll put them on the website.
Yeah. If you're jamming with Springsteen on the street, send it into us. Don't worry about the copyright issues, and we'll absolutely talk about it on the show. Talk about it on the show.
Sometimes I think that when if and when you become famous, I will have this a never-ending brush with greatness, where people will want to be. They will consider me a brush with greatness, like kind of one person removed.
Well, but they'll say, "Hey, I met that guy who used to do the show with that other guy," right? And then that's how you'll get there, right? So it's like a 6 degrees of separation thing, right?
Didn't you do a show with Jay Marsden? As a matter of fact,
way years ago. Yeah, we used to be buds. Yeah, we used to be I can call him. I can get through. If I get through his people, he'll pick up. Yeah, absolutely.
Oh yeah, I got his number. Sometimes totally. I swing by his office every now.
Yeah, he's never there, but it's fine. Yeah, he's napping.
He doesn't.
Napping in the afternoon?
No, he doesn't. No one's napping in the afternoon. We're not that old.
Getting there.
We're not that tired.
Feels it someday.
All right. Well, speaking of not getting that old, We're going to talk about long-term care insurance.
Speaking of maybe not getting, not getting old for the right reasons, not the wrong reasons, right?
Speaking of taking a nap during the day or not being able to do something during the day.
Yep,
like,
wearing big white sneakers or whatever it's going to be. Yeah, absolutely right. Let's talk about it.
Well, I wanted to talk, I mean, we've talked about on the show before, we talked about kind of the importance of long-term care, kind of where or long-term care insurance in particular, and kind of where it fits, what kind of person it fits for, what's it used for. And it's funny because, in our practice, they'll oftentimes bring it up. And oftentimes the people who bring it up are the people who in our evaluation are too young for it. They're too young. They're too young to kind of make that kind of a purchase or make that kind of a financial commitment because, in the odds of them being in some sort of a long-term care situation within the next 20, even 30 years is virtually non-existent.
Well, the other thing too is on the advisor side, and we, as lawyers we do this, but as on the advisor side, you say to yourself, to some degree, I only get I mainly have a couple things to talk about, right?
Yeah.
So we can talk about your portfolio, okay. Maybe we talk about college planning, depending on the client, the age of the client. So if the client's 32, you're talking about college planning. If they're 62, you're not talking about college planning unless they have young kids for some reason or later in life, the family came together. So what you're pulling out of your bag of tricks, if you will, gets a little bit, it can be somewhat finite. It can be somewhat finite.
So let me get this straight. What you're saying is that there are times when you're in a meeting where you don't have enough things to talk about?
No. Well, I guess what I'm saying is...
Wait a minute. I'm talking about like other than legal or financial or anything. I'm sure, knowing you, I'm sure you'll find plenty of things to talk about.
I guess what you're saying is rarely am I at a loss for words, if that's what you're trying to say.
Well, not even loss for words, but loss for, good conversation, but talking about something important.
Right, but I guess my point with the long-term care piece is because it's the elephant in the room, it comes up all the time, right?
Yeah.
And I don't know if it comes up all the time because people want to just put it on the table because they want more stuff to talk about. I do believe that. Because to your point, when somebody walks in at 47 and says, so the advisor I was talking to mentioned long-term care. It's like, 47?
Yeah.
47? You get a bigger chance of checking out than you do needing long-term care.
Right.
You get like 80 other things in front of you in line before you get, it's in long-term care, it's in the list. It's in there, don't get me wrong. But to your point, it comes up in some situations and it comes up early.
Yeah.
And I just don't know why it comes up so early.
Well, I know why sometimes it comes up early because because someone mentions it to them. Someone, or even more, someone will say, oh, they recommend it to them. Oh, you know what? You should do this. And maybe it's out of good nature. Maybe it's because they care. They're like, hey, listen, we just went through this. We don't want to see somebody go through the same thing that my parents went through. So, we called the long-term care insurance guy, and this guy came and gave us a quote for, and we're in our early 50s. And so oftentimes that's how it comes up. It's someone's trying to sell it to you, or someone's presenting it as you might want to consider this, and consider this now because, here's what you get if you buy it now versus the cost of when you buy it and all that stuff, which we've
talked about that before where, hey, if you're a hammer, right, everything's a nail, right?
Wow.
So if that's all you do, so yes, are you going to recommend it to everybody? Sure. Should everybody have a will? Should everybody have an estate plan? Yeah, absolutely. Everybody? Well, maybe not everybody. There are situations where you might not need it, it might not work out. Again, it's very situational, but I feel like the long-term care piece is a hot button issue, shows up all the time, and I think it needs to, sometimes I feel like it's one of those things that needs to happen when there's no urgency to it, so people can step back, take a deep breath, and make a decision as to, is this something that we need right now? Is it a nice to have? Or is it a must-have? And that depends on where you are.
So thank goodness that you are tuned into Money and the Law right now, because we're going to give you the answer. We're going to tell you exactly what you need to do. And if you question this, or if you think, then by all means, contact us via the website at moneyandthelaw.net. Send us an email. We're happy to discuss it. I'm happy to debate this with anybody.
Yeah.
Just kind of based on our, and I know Jay and I are pretty much lockstep in this. Like based on our experience, we'll say, look, here's the time when you need to start thinking about it. Here's the time when you definitely need to start thinking about it. But then go back even, take a step back even more and say, here's the time if you need to start thinking about it or not.
Yeah.
Because some people may say, I want to buy long-term care insurance, and I'll tell them, and we sell it. I mean, I'm like, it's a good deal, right?
Yeah.
So I'll be like, I'll say, no, like no. And they're like, but wait, I'm 62. I'm 65. My both of my parents, ended up in nursing homes. And I'll say, no. And I'll explain why.
There's a reason why. There may be a reason why. There may be a reason it doesn't make any sense.
There'll be a very good reason why.
And if you send us in your argument and we don't like your argument or it doesn't match up with what we say, we'll just discard your argument. We won't read it on the air and everything's fine.
If we don't agree with your argument,
That's right.
That's not true. That's
fake news.
That's fake news. All right, so let's take a quick break, and then we'll come back and we'll dive right into this. Dive into the deep end of the long-term care pool, which it's full of piranhas, right?
Yeah.
So
Sharks, fins up. Yeah.
We'll be right back on Money in the Law, My FM 101.3. Jay Marsden, John Drohan, Marsden Law Group, Main Effort Financial, and of course Holliston Cable Access TV, and the one and only Christian.
Two-camera Christian today.
We'll be right back.
And we're back. Money in the Law, My FM 101.3. He's John Drohan, Main Effort Financial. I'm Jay Marsden, Marsden Law Group, Christian man in the con. And we are talking long-term care insurance today.
Before we talk about that,
okay,
I want to talk about two things. One, you mentioned before the break, we're a two-camera Christian today. Yeah. So those of you who are fortunate to be enjoying this on Holliston Cable Access TV, we're taking it to the next level. Christian is
or he's just filming you with one camera. He's filming me with the other
camera.
Both
the cameras are on me right now.
They're on
me right now.
Is that red light on? Yeah. What's that red light?
It's not unlike when you in the news where they do have the two camera, and then I turn and then I turn over here just to pretending that as if there was a live studio audience. I just thought about that. Why don't we have some kind of canned laughter in here?
Oh my God.
I mean, that'd be it. Some I Love
sound
Lucy.
Effects. Oh yeah. Little Johnny Carson, little Tonight Show theme. Oh yeah, good stuff.
Well, so that was the first thing. The second thing is I don't know if any of you have noticed this, but I noticed this morning when I saw my buddy Jay. I think the beard has started.
I can tell you, I was on the fence about starting the beard, and then, as always, I woke up today and it was 28 degrees.
Yeah.
And I thought to myself, the timing just seems right. It's been miserable. It's been gray. It's been gloomy. This is the time that I would normally be basking in the golden glow of southern Florida sunshine down in Key West, Florida, and not making the trip this year for a whole host of reasons. So I figured, you know what? Why not? Well,
let me ask you this. Here's the question. This is probably the question that your wife asked. This is probably the question that all your friends asked or your kids asked is, Dad, actually your beard looks pretty good right now. It looks like kind of normal, and you don't look like you're homeless. You look like you have a home.
Yep.
Probably a nice home too. And yet, in the coming weeks, for those of you who are going to get to see this progression happen through the holidays, it's almost like it's like one of those time warp things where it's a bad dream and it just gets worse and worse, where you say, I can't even recognize that guy from 6 months ago.
Oh, it's the beginning of Castaway and it's the end of Castaway. That's what it is, right? Tom Hanks is on the flight, all buttoned up, smoothly shaven, and then he shows up at the on the cruise ship, the commercial cargo ship, and that's what it looks like. Yep.
Yeah, but he's a much better fisherman at that point.
True,
right? So
a better sailor than I am. That's exactly
and a
right.
much stronger stomach at that point because he can pretty much eat anything raw.
Yep, that's true. Yep, that's true. Yep. He should have had long-term care insurance. He would have needed it. Yep.
He probably would have. He probably would have needed it. All right, so let's talk about that. So just for the basics. So long-term care insurance is a form of insurance that will pay for several different types of care that one may need if they are incapacitated or as they are aging. So long-term care insurance, and the rule of thumb, right, is that two kind of primary things. Long-term care insurance you can activate it if you can't do 2 of the 6 daily activities of daily living. Right. So any 2 of those: eating, getting dressed,
drinking scotch, smoking cigars. Those are the activities of daily living.
Those are the 2. Those are the top 2.
If I can't do those 2, okay, then it's time.
Then your long-term care insurance policy
can kick in. I have a special rider.
Call the company.
Those things kick in.
So So it's if you can't usually do one or two of those, I mean, there's some policies that allow you if you can't even do one, that then you can activate your benefits, or if you have cognitive issues, and that may not include any of your activities of daily living, but if you are suffering from some sort of like early on stage dementia or Alzheimer's, and you can't you forget where you are, you can't drive, you can't remember things, then that can trigger your ability to collect your benefits. So what do the benefits give you? Usually the long-term care insurance policy, there's a wide range of different types of things, but usually what it's essentially a bucket of money that can get paid to you over a certain amount of time in certain ways. So you can get it paid, whether it could be a daily benefit. So you can say my long-term care policy will pay up to $300 a day.
Yep.
It can pay up to, or it can be a monthly benefit or an annual benefit, however your policy is set up. But essentially, it's a benefit that'll last for a certain amount of time. So $300 a day for 4 years, 3 years, 2 years, 5 years.
Yeah, 6 years is pretty standard, right? 6-year benefit window, and then you need to figure out what the math is, right? And then the policy will have a cap on it, right? This is the most we'll pay out for part of this policy.
Sure. So essentially it just turns into, like I said, a bucket of money that you can draw off of in the way the policy is structured over a period of time until either the period of time runs out. Well, usually, no, it's either until that the bucket of money runs out.
Yeah.
So
money runs out or you run out. It's one of the two.
That's right. So the and what it can be used for is it can be used for a number of different things. It can be used for in-home care. So this is one of the cool things about long-term care insurance is that people like the idea. I mean, because and we've talked about this many times on the show, is that this usually isn't like an overnight thing. It's not like you wake up one day and you're like, oh, I have to leave. I can't stay here. I can't do 2 activities of daily living.
Yeah, it's not a rehab situation. You go and you have your knee replaced or you have a hip replacement. You come back home and you need help for a little bit of time because you can't do a couple of things, but you're on the mend, right?
Yeah.
You're going to get better and that condition is going to go away, right? This is not that scenario, right? This is you have reached a degree or a level of frailty that you start to need help doing things that we all, for most cases, we take for granted, right? You want to get up and get dressed in the morning, you don't even think about it, right? It's a non-event. But if you have real health issues that make getting dressed difficult, that could be a 4-hour project. And the idea behind a long-term care policy is you need help with this stuff, right? And so this is where somebody's going to come in, and to John's point, you're going to use some portion of your benefit to help you do this. Take a shower, go to the bathroom, get dressed, those things. It's things that we all take for granted that have become a difficult challenge now on a daily basis, not temporary, a daily basis.
Yeah, and remember, this is so if you're going to use it for if your benefit is for in-home care, that means that at that point, let's say that you're married and your spouse, or if you have children, or if you have friends, or anybody like your kind of natural circle can't do it anymore, or they need help to help you, right?
Yeah.
So, or they may be older as well, and they don't have the capacity to be able to help you. It's unsafe, or whatever the reason. But you can't do this on your own, and then the people close to you, they can't do it either. So now it comes time where you need help, right?
Right, and think about it from a personal perspective, right? I mean, everybody gets caught up in the insurance piece of it. I mean, think about it, right? If you lived close to your parents and your parents needed help, right? You'd get up in the morning and you give the very typical, hey, I'm going to swing over to my mother's in the morning, make sure she's all set for the day, right? Basically get her ready for the day, and I'm going to go to work from there, going to run along from there, right? Well, we don't live in that world anymore.
Right.
It just doesn't happen. You don't live next door to your parents. You don't live downstairs from your parents. Unless you're a single Italian guy, you always live downstairs from your mother, right? They never move out, right? So these are the things that have to happen,
Because they're
right?
smart.
That's right. Because they're genius.
Because they don't do laundry, and their
right.
mother cooks for them every day. But
Yeah,
whatever.
That's right. That's right. It's a different animal. It's a different choice, different path. But that's what you're doing, right? These people are playing a role, a caretaker role that traditionally had been fulfilled or filled by family, right? So now that doesn't, that for any reason, just doesn't work anymore.
Right. So it can do that. It can pay for in-home care, but it also could pay for, let's say that you can't work, you can't do this at home, or let's say home is just, it's not built for this, right? Let's say you live in a house, like an older house with steep stairs, and you just can't do it. So now your care level has required you to go to a place that is built for it, like an assisted living place. So assisted living is another it's paid for by out of pocket, so it's not a Medicaid covered thing. So it's something
independent in many cases to some degree.
It's something that you have to pay for, and if you fall into that category, activities of daily living or cognitive issues, you can activate your long-term care insurance policy to pay for to help pay for assisted living, and that's a very common thing. If people have long-term care insurance, they'll use it because once you're in assisted living, then if you're in assisted living, then you're in that category, and if you have long-term care insurance, then absolutely you're going to use it. And then the last, of course, is a nursing home, like a full-fledged skilled nursing facility, nursing home, and of course your long-term care. If someone's in that situation, then obviously they need that level of care. Your long-term care insurance policy is built for that, and you can use it to help pay for that, to augment the cost of that.
Yeah, it's built to cover some of that. But what we try to advise clients is when you get a long-term care policy, we are not trying to ensure the cover a cost your stay in the nursing home.
Because the nursing home's too expensive.
It's too expensive, and that's not what we're trying to do, right? What we're trying to do with long-term care insurance is to provide all the services that you might need in your own home, right? The objective is to keep you home, or the way we describe it is keep you in the most independent setting possible, right? And that can cover obviously a range of settings, but we try to keep you in the most independent setting possible. And the long-term care insurance, I explain to clients to say, look, the goal with the long-term care policy is to keep you in your chair, in your living room, watching Law and Order on your TV. That's the objective. That's what the goal is, right?
It's always some lawyer show too, right? Like
why wouldn't you?
Why can't you watch, I don't know, Ozark or Walking Dead or something?
Well, now you have a lot
like
of options.
Yeah,
now you have a lot of I mean, think about it. Let me tell you,
Netflix,
we talk about it's a lot better being housebound, right? Not that you want to be housebound, but if you got to be housebound today,
you got some things to do.
It's a lot different
than
being housebound 100 years ago, right?
That's right.
You know, binge watching wasn't a thing when all you had to watch was 4, 5, and 7. 56 and 38, depending on where you lived.
You could catch a movie, right? You could catch a movie with 11,000 commercials, right?
That's right. And by the way, when the programming turned off at like 10 o'clock at night, right? You know, that screen went up.
And that's long before the Holliston Cable Access TV started having some real shows on it.
Yeah.
So real shows.
So, you know, again, if housebound now, it's a different story, right? So long-term care insurance, let's pull the trigger on this thing and get you into the brand spanking new Barca Lounger, get you comfortable, pile up some blankets, and then let people come in and take care of you. That's what it's for. That's what it's for. It's not to say, oh boy, thank God we insured your stay at the nursing home in your semi-private room with
you don't remember,
with your roommate, right? Who doesn't want to watch Law and Order, right? They want to watch Chicago Med or something like that, which nobody wants to watch, right? They want to watch Law and Order. Of course you do, right?
Show.
So that's the idea, right? That's how we phrase it with people. All right.
So there you have it. So that's the long-term care policy, the long-term care insurance policy. It'll pay for the things you need for the help you need at whatever different level. It'll pay for or help augment that cost.
Can we take a quick break and then come back and talk about?
Do you have to go? Do you have to what?
No,
do you have to sign a document or something?
I'm catching the natural break in the action here. Is what I'm doing.
Yes, as a matter of fact, I was going to.
See?
Yes,
of course you were. Go ahead.
You know why? You know why? Because we're connected.
I know.
We've been working together a long time.
It works.
Didn't I identify you as an associate the other day?
I believe you did. Yeah.
My associate.
Yes.
At a very like
arm's length, very arm's length, very objective and non-interested party.
Okay, so when we come back, we'll talk about. So my tease is that hey, why wouldn't we all want to get this long-term care insurance policy? Of course we want it. It's going to help pay for these things that cost a lot of money, and it won't cut into my money. It won't cut into my saved up assets. We'll talk about why you may not want to buy one of these and when you want to buy those when we come back on My FM 101.3 Money and the Law. We'll be right back.
And we're back. Money and the Law, My FM 101.3. He's John Drohan, Manager Financial. I'm Jay Marsden, Marsden Law Group.
What can you do in your
Christian at the con. And a shout out, by the way, local music awards date has been announced, November 18th. If anybody's listening, we were talking to Ray about it before the show. Great local take. Go see some local bands, see some awards get handed out, and be part of Metro West's local music scene. So
All the
November
details
18th.
are on the MyFM 101.3 website at MyFM 101.3.
Check it out. Great night. It's one of those award shows. You say to yourself, you know what? I don't have to go to Vegas, or I don't have to go to L.A. I can go to it right here in my own hometown, locally, right here, MyFM 101.3.
Milford.
Putting this on in my backyard. And obviously, unless you're in the scene, you forget that there's a ton of phenomenal acts around here. There's a ton of great music being made right here. And Ray and his crew are the heartbeat of it right here.
You know what I love? I love about live music, particularly local live music, is the energy, right? Because these guys are out. Like no one's getting rich doing this right now.
No.
It's not like they're hitting it out of the park. It's not like they're signing these multi-zillion-dollar record deals. These guys are doing it because they love music.
Well, and not only that, they're good.
And
guys
they're
are great.
And they're
Right?
they're
These guys
legit.
are the real deal.
Like they're legitimate musicians. They're
Yes.
not just like, oh, I'm going to play the piano every now and again. I can sing a little bit, and maybe I can sing a song that sort of sounds like the person who wrote it.
No, they do a great job. They make it their own. The banter, the feedback, the engagement with the crowd. I mean, every time we go see people locally, couldn't have a better time.
Yeah.
Couldn't have a better time. And we're huge advocates personally and as professionally as we can be for live music. We love them.
Unprofessionally as we can be.
Any musicians need estate planning out there, let us know. We'd love to have a conversation with you.
All musicians need estate planning.
Yes, they do. Everybody needs it. Why wouldn't they?
Right, yeah. I mean, I can't think of any musicians that...
Prince needed it. He never will.
Aretha,
she needed it. She never will. So they could. Anybody big in the industry, small in the industry,
big or small,
give us a call. We'll help you out.
matter.
You know what? You a lot of royalty checks coming your way.
Okay, so we're coming back to long-term care insurance,
Bring it back.
and who okay, so who needs it? Who needs it? What does it do? So obviously it pays out it enables you to pay or help to pay for this type of care. And this type of care, as we know and as we've talked about on the show before, can be very expensive.
Oh, it ain't cheap.
Can be very expensive. And in-home care can be very expensive. It could be upwards $100, $200, $300, $400, $500 a day, kind of depending on where you are, what level of care you need.
How much care you need? Yeah, $25 an hour, right? Add it up, right?
I mean, how much does an assisted living, the average assisted living cost around here now? You'd go anywhere from what?
$7,500 maybe?
$7,500 a month.
It gets really expensive.
Right.
Yeah.
Right. And then of course if you go to the skilled nursing facility, the nursing home, then now you're talking north
12.
of 10, I was going to say north of $10,000, $11,000,
absolutely.
$12,000 a month. Which of course, if somebody's in that situation, particularly if they're going to be there for any extended period of time. When I say extended period of time, it could be 6, 12 months or more. You're talking it's going to take all your money. Yeah. It's going to exhaust all of your finances. So when I first came in the business, the guy Mike D'Anzaris, the guy who brought me in the business, he described this to me as he said, long-term care is there to protect. I mean, you're gonna get if you need some type of long-term care, you're gonna get it. It's just a matter of who's gonna pay for it.
Yeah.
And so essentially, a long-term care insurance policy protects you, but more as much it protects your assets. It protects your money.
Yes.
It protects your money. So and if you're in that situation, or your spouse or your family's in that situation, and you have this bucket, and you're not going to qualify for any state help, you're not going to qualify for Medicaid because you have money in the bank, because you have assets, the long-term care insurance policy is designed to kind of take the edge off of having to draw down and use your assets or use your income.
Well, it's funny you mention that, because a lot of people as you can imagine, get overwhelmed at the prospect of this type of issue, right? They really get overwhelmed. And so the way we try to simplify it for people and break it down as best we can is we try to say to people, look, the care needs are going to drive the plan, right? So stop worrying about all this other stuff over here that in some respects can be noise, right? The first thing we say is, what do mom and dad need, right? What do your parents need? Do they need somebody to your point, right? Do they need somebody to come in and take care of them and help them out? Because you know what? Because you can do it, right? Yep. So that's arguably that's self-insuring, right? You are going to do it as the child, or as the loved one, or as the family member. Are you going to do that? And if the answer is no, I can't for any number of reasons. Okay, so then who's going to do it? So what care do they need? And then absolutely, your point, how do we pay for it?
Right. And what level of care, right?
That's right.
Because it's going to start here. and maybe, most likely, oftentimes it will progress, right?
Yeah.
So maybe they only need people to come in a couple days a week because those are the days that you're working, or those are the days that you and your brothers and your sisters can't cover those days. But then maybe they need somebody there longer. Maybe they need somebody to stay overnight because there's a safety issue or whatever. Then so like as that progresses, then so might the level of care and the level of what they need.
And those folks will come in. I mean, the people, the agency, if you will, that you hire will come in and they'll say to you, hey, what do you need for care, right? And they'll do an assessment. They'll do a safety assessment. They'll do a health assessment. And then they'll come back and they'll say, this is what we think you need. This is what we can provide. And then that's when you go right to your phrase of, okay, where's that check coming from?
That's right.
Right? Who's writing that check? Is that check coming from mom and dad, if they have the resources for it? Is it coming from their investments? Is it coming from a reverse mortgage on their house? Is it coming from you? Are the kids saying, look, we'll fund this? Or, oh my God, mom and dad had this long-term care insurance policy. Well, let's dust that puppy off and let's take a look at it and see if this is going to cover it, right?
And hopefully that before you've gotten to this point, right? Before you've gotten to, that you've done this, you've kind of thought through this, and you've done this planning, and if you or at least you've discussed it, because as we'll talk about in a couple minutes, when you're planning this, when you're kind of talking about, all right, kind of what's our long range plan,
right.
And if you're talking to your mom and dad, and let's say they're in their mid 60s, and they're they just got back from their trip to Key West, and they're heading out to the Grand Canyon next week,
Sure.
they're running and gunning, they're retired, they're everything's great. They the idea of them ending up in a place where they need in-home care or assisted living or a nursing home seems a long ways away. But that's the time to talk about it. That's the time where you can say, hey, look, okay, so what happens if? What happens, right. and not happens what happens if it happens tomorrow. What happens if, 10 years from now or 15 years from now? And hopefully you've had that conversation where you say, okay, look, you have money to protect, right? You have assets. And you say, okay, if or when or whatever somebody needs help down the road, the $1 million question, how are we going to pay for it? How's it going to get paid? How are you going to pay? And your parents may turn around and say to you, they may say, we're paying for it. We're paying for it. And our plan is we have $500,000 in the bank. So that means that we're not going to qualify for any type of state help at any time or anytime soon. So guess what? We're going to spend that money down, all the way down, and as much as we need. And then if we run out of money before both of us die, and we still need help, then guess what? Then we'll talk about going to the state.
And make no mistake about it. This is insurance, right? Everybody kind of looks at this like it's this foreign concept in some respects, right? People spend their entire life with insurance as a substantial portion of their existence, and they don't even realize it, right? Yeah. For the most part, when you come into this world, you're covered by insurance, right? Mom and dad had insurance through work, and that covered the stay at the hospital, and that covered all the work. Mom and dad didn't get a bill for $180,000 because you showed up on the scene. They had insurance, right? They hopefully had good insurance, right? And they either had insurance through work, or they had insurance through the government.
But I thought you were born. I didn't think you were born in a hospital.
I was born in a manger. Like an inn. A couple of guys hanging around. Three guys showed up. Hey, what's going on? Hey, who's this guy? We just figured we're here to see him, right?
I thought it was in the back of a concert tour bus. But anyway,
that's a different story. It's a different story. Rolling down a Greyhound bus, yeah. Highway 41, whatever it is, yeah. So you cover by insurance, right? And then you get older and you get a car. And what do? First thing you do, you insure your car, right? And then you buy, because you got to, right? Because why? Because you know what? Because the government makes you for the most part. But if you didn't, you say to yourself, I don't, now maybe if your car's not worth a lot, you don't insure it for a lot, but your car gets wrecked, you call the insurance company, they say they write you a check. And then you buy a house, right? And you get house insurance so that your house doesn't burn down. And if it does, again, you don't hope your house burns down, so you get the insurance check. You just write the check because you're covering yourself for insurance.
That's right.
And then you get insurance. You get your own health insurance. And you cover your kids by insurance. So this idea that again, you can go without if you want to go without, but it's just insurance. Mm-hmm. You're just planning to say, if something happens, I want this cost borne by a company. Yep. Just like I've done my entire life.
Or part of it, right? Or part of the cost.
Yeah, life insurance, right? If I'm not around, I want my family to get a check, right? Long-term care insurance, if I can't do these things, I want somebody else to help pay to let me do it. And if you don't want to do that, That's your choice. That's fine. But it's really just think about it in the framework of just insurance. Forget that it's long-term care. You're covering a risk, and this is the risk. And you hope it doesn't happen, but you're covering it anyway.
Right, and because it may not happen, right?
That's right.
You and your wife may be 110 years old and die like side by side on the front porch, never having to have had anybody come into the house or help them or have any type of a long-term care situation.
Yeah.
So you're hedging your bet. You're hedging against this risk, and then of course, because you're hedging against this risk, as you do with all the other types of insurance that you have in your life, there's a cost involved with it.
Yep.
There's a cost. And the thing with long-term care insurance, it's a form of health insurance, but it ain't cheap. And it's one of those things where the older you get, the older you buy it, the more expensive, as with life insurance or anything, is the more expensive it's going to be.
And just think about, again, back to this general insurance concept. The closer you are, or the higher the probability that you're going to use it, the more expensive it is, right? You buy a life insurance policy at 90, life insurance companies can say, we get a pretty good chance that you're going to pull the trigger on this pretty soon. Yeah. So here's your premium. Yeah, we'll cover you. Your premium is ridiculous, right?
Your premium is $99,000 for a $100,000
That's right.
policy. Yeah.
Your brand spanking new teenage driver walks out and gets in the car in the driveway. The insurance company's saying there's a pretty good probability that they don't know what they're doing.
There may
right?
be a claim.
That's right. That's right. So your cost is high, right? So this is the same idea. Go ahead.
So with respect to long-term care insurance, so if the longer I wait to buy it, the more expensive it's going to be, and that, unfortunately, in the long-term care insurance sales world, is kind of where people get played a little bit. And we alluded to this early in the show, where someone will say, well, okay, I look at this and I'm saying, wow, a long-term care insurance policy. If I'm ever in a long-term care insurance situation, a long-term care situation, and wouldn't it be great if I had a long-term care insurance policy? Everybody says that, right? Everybody's like, of course it would. Like, oh my God, I can pay $300 a day, and oh, by the way, if I buy it now, there'll be a cost of living adjustment, there'll be a compound inflation adjustment. So maybe my $300 a day will pay $500 a day by the time I actually
down the road if I ever need it.
That's right. So of course, if you're in that situation, of course people will want it. They'll be like, would you rather spend your $500 a day out of your bank account, or would you rather have the insurance company pay for it? It's a no-brainer, right? But it's going to come at a cost, and it's going to come at a relatively significant cost, even if you buy it at a young age. So here's the issue. The issue is that, okay, if I buy it at age, let's say I buy it at age 50 versus age 65. Well, I'll make up some numbers. Let's say at age 50, for me and my wife to have a long-term care insurance policy, let's say it costs us $2,500 a year, right? And let's say if we buy it at age 65, so 15 years later, let's say it costs $5,500 a year. So a $3,000 a year difference. You're like, wow, that's not a bad deal, right? So I look at this and I say, well, that's great. How much cheaper is that? That's so much cheaper. But the two things. One, I'm paying for that $2,500 a year for 15 years, right? And and we talked about the probability of me needing that in between ages 50 and 65 are very, very slim, barring having some type of
some catastrophe. Some catastrophe,
right? Which
you can't plan for. Yeah,
that's right. Yeah. And that's a risk of there's the risk that like a nuclear missile could come through this window right now. The odds of it happening are pretty slim. Wait, no.
I'll plan around it, but let me close the shutters.
But so everybody, you walk through life with you assume risk. You get in a car, I'm assuming a risk. So the idea of kind of buying this at age 50 sounds cool because I'm getting it much cheaper. But remember, now I'm going to pay for it for 15 years before I would have bought it again. So I do the math on that. My 15 years of $2,500, that all adds up. But then even more importantly, as from a planner, and you do the same thing, you say, okay, wait a minute, $2,500 at age 50, $2,500 a year, could I be using that money for something more important, or something that, or something
more relevant, something more relevant to my right now?
Exactly.
Yeah.
Yeah, that was a good word.
I know.
Yeah.
Big words.
So there you go. So it's more relevant because, oh, by the way, I haven't fully funded my retirement yet.
Right.
Maybe my kids still aren't in school.
Oh, yeah.
Maybe I like going on vacation other than, going to Stoddard Park for 2 weeks. I don't know if people do that, but they could.
I don't think they go for 2 weeks. I think we have a week-long max there. That's right.
It's a week-long.
You pull your trailer in. Yep,
right?
yep.
So as a 50-year-old, I'm like, look, I have much better things to spend my money, invest my money, place to put my money for my $2,500 a year somewhere else, as opposed to buying a long-term care insurance policy, which I'm not going to use theoretically for 30 years, hopefully more.
Right. Well, what we tell clients too is we'll say, look, you got to think about this, right? Are you going to buy a long-term care insurance policy? And without getting into the details, and it could be a whole nother show, we're partial to the hybrid policies that allow you to pay a lump sum, and if you ever need your money back, you can get it, and we can get into that down the road. But there are different types of policies. They come in a whole bunch of different flavors, but there's generally the ones that John's mentioned here where you pay a premium annually, and then there's a bunch of one-time policies where you just write a check and you're done. And then potentially there's some return of premium options and things like that that you pay for. I mean, again, you pay for these things. But we'll talk about it, and we'll say exactly the way you phrased it. We'll say, look, if this is something you're concerned about, here are your options. One option is you buy a policy to cover it, right? Just like every other. I'm concerned about dying. I'm concerned about my house burning down. I'm concerned about getting a car accident. You buy insurance to cover the risk. And if you don't, if you want to self-insure, then that's fine. Mm-hmm. You throw the dice and say, hey, if it happens, it happens, and I'm not all that worried about it, and I'll deal with it when I have to deal with it. Or you mentioned, there are some government-run programs that may avail themselves to somebody who needs these types of services, and you have to make a decision. Am I going to jump through those hoops to make Medicaid and some of these government programs to make them my long-term care insurance policy? Right. And that involves doing things with your assets, giving up control, divesting yourself of certain assets to make these things work, and that becomes the question.
So as I'm thinking about this, and I'm looking at like the buying long, so in my mind, right, as a 50-year-old, I'm like, I do feel like I'm going to need this at some point. Sure. But I don't need it right now. I'm going to assume risk and say, okay, I'll cross this bridge later on down the road once I'm in a different financial situation, a different stage in my life. So at that point, then and knowing full well that I know it's going to cost more, right?
Well, but the answer might also be to get based on your particular situation. Like you mentioned, there are things that we can't plan for, right? Early onset dementia, diagnosis, or something of that nature. So you do have to sort of ask yourself the question, is there anything in my family that I need to worry about that runs in my family, sure, right? Because the underwriting for long-term care insurance is different than the underwriting for life insurance. Mm-hmm. So if you're going to have a stroke and die, the long-term care people don't care, right? Because they're worried about you hanging around for 15 years, right? So that's what they're looking at. So if you have a history of chronic illness in your family, like Parkinson's, like dementia, some of those issues, that could be a long-term care explosion from a actuarial perspective. It might make sense at 50 to say, you know what, I haven't been diagnosed with anything, but I know my family has a real history of it, and the probability is pretty good that this might show up. So I am going to jump on the bandwagon now. This might make more sense now.
So and again, from the financial planning / retirement planning perspective, it has to be something that you can afford.
Yes.
It has to be something that makes sense, that works inside of your budget. So if you're one of those rare people where you think, you know what, I need to do this now just based on my family history or based on some history that we had before, this is something I could look that I may consider. Now,
well, to your point, you don't want to jump onto a program like this thinking that you're buying yourself some peace of mind, only to find out in 5 years you can't afford it, and your life has changed, circumstances have changed, and you become uninsurable, and now you really have to make a decision. Am I going to keep this, or am I going to do something else and do something different? So
coming back to the idea of can I afford it? This is when everybody would love to have it in their situation, but there are plenty of times where people will come to us and they'll say, well, what about and these are people like in that age bracket, they're in their 60s early, yep, and they're in that retirement age bracket, and they'll say, you know what, we want to buy a long-term care insurance policy. And I'll say, and I'll look at their assets, and I'll say, okay, you have 150. Let's say you have a pension, right? You have a pension, yeah, that you're going to receive for your life. You have Social Security, and you have $150,000 in the bank, and that's it, and that's all you have. and that $150,000. I mean, that's going to be the money that you're going to use to travel, to do kind of the things in your golden years, and let's say you own your house outright, and that's all that you have. So at this point, and then on top of it, you're going to say, well, you're going to get a $5,500 a year long-term care insurance bill. I'm going to tell you, as much as that would be great, and if you fall in that situation, you'll be happy you have it. I'll tell you, if I'm you, I don't do it. It's too expensive. It's too expensive to buy. It'd be like getting a car that has like a $700 a month car payment. It's too expensive for you.
Well, and we would have a conversation with that client, and we would say exactly what you just said, and then we'd say, for what you want to think about, potentially, Medicaid's your plan, right? If somebody gets sick and needs long-term care, because we ask that of all of our clients, what happens if you get sick and need long-term care? And they say, well, we want to do a long-term care insurance policy. We make the same suggestion. I'm not sure you can afford it. Let's tell you right now what the Medicaid rules look like, because if somebody gets sick, this is what would happen. You play it out a little bit, and then this would be your path forward, and this is how you would get your services covered. This is how we would do it. Just like if you came in and you have a pile of dough, and you say, well, I want to get eligible for Medicaid, we say, stop. That's never happening to you, all right? You're not going to be a Medicaid patient, or you're not going to be on Medicaid. You've got too much money, your resources are too great, you're of means. It's just not in the cards for you. Either buy a long-term care insurance policy or self-fund it. But you come in the door like that, it's just not going to work. So there are suggestions, and to John's point, there are suggestions that will be made to somebody that are, as much as you might want it, it just might not make sense for you financially on the pro and the con end of that deal.
So I think what we take away from this today is that every situation is different.
Yep.
Everybody has got, and again, it all depends on kind of like Jay mentioned, your family history, your where you are in your life, what your financial situation is, what your retirement situation looks like, and at that point, you have to. The decision on whether or not to get a long-term care insurance policy, it's a big one. It's a big
huge,
one because it's a big financial commitment. And then there's always the things of like, well, it's a health insurance, so potentially the rates could go up. So you always have to kind of take that into consideration.
You become uninsurable. You don't want to turn these things on and off. You want to make the decision and stick with it.
So the bottom line is, as you start to approach your retirement, again, we kind of look at it in a retirement standpoint, because people who are like before their retirement, they'll say, well, I can afford $5,000 a year. And I'll say, well, I don't know if you can, because that $5,000 a year saved in a different manner may serve you better.
Right.
But again, it all depends kind of on that individual evaluation. So go to your planner. Go to your estate planner.
Talk to your advisor.
Talk to them, and they'll, if they're worth their salt, they'll point you in the right direction in a good fiduciary way.
They'll give you the pros and the cons and help you make an educated decision about it.
The pros.
The pros.
And there's no cons.
No cons.
Here.
No cons here. No cons here. Just a couple of pros.
That's it. We're done.
We're done. All right, guys. Have a great week. Big weekend coming up. A big week and weekend coming up. Next week's going to be Thanksgiving, so we'll have all kinds of stuff to talk about. Oh, I'm going to tell you. We're going to talk about a very funny story that happened last Thanksgiving about a show that we did that you made fun of me on, but it's got some real value, and we'll talk about it next week.
When did I
just remind me to talk about the Thanksgiving thing next week.
I didn't make fun of you.
Yeah, you did. We'll talk about it next week, everybody. Have a great week. Jay Marsden, Law Group,
bye.
John Drohan, Man Ever Financial, My FM 101.3. Have a great week.